All right, I'm Andrew Cox alongside the Sultan of Sonar, Zach Strickland. I think we're talking a little reefer data today. What do you got for us?
Yeah, so today we've got all the three big modes that we track in Sonar with our tender rejection rates for van, reefer, and flatbed here, just to show, in general, how these markets are kind of operating. Their dynamics are very different. And we have the green line here. This is our reefer tender rejection rate. It started to come down. It actually kind of peaked a little bit up before the holiday and then fell back down again, seasonal impact. Not a big deal, but the overall trend line has already fallen back in line. We peaked up here around 50%. Now, the higher the rejection rate goes, there's more gravity on it. It just cannot sustain. The higher it goes, there's resistance. We looked at it in the tender rejection rate in general, like it gets up to almost 28, 29%, and then it just can't get much higher. Natural tendencies for carriers to start wanting to accept more freight. Shippers also, they can't operate that way.
Right, they just have to raise rates.
Yeah, there has to be something that gives. So van rejection rates hovering. They're not really moving that much. I mean, we've been right around this 25, 26% tender rejection rate for a long time now. We got up close to 30% there at the end of February and early March, and of course Easter, and things haven't changed that much. We're still in the mid to high 20s, 26.31% right there. And flatbed in the orange line, industrial sector, you can almost pick out where it turns on. Anthony Smith's favorite tender rejection index. As it peaks up here in March, everything cranks, and we're still in all-time high for flatbed back here in June, about 30, just over 30% on the tender rejection rate.
Yeah, I know you're not a huge fan of the diffusion indices, but I think there is some good correlation there when the indices really turned positive there in March and started seeing some flatbed and really just overall industrial and manufacturing power there.
Yeah, exactly. All that winter freeze really turned on. A lot of the chemicals and everything are produced in Texas. Manufacturing, you have to have all that, all that stuff to get all those factories start to run again. So let's go ahead and go into the map and see where reefer capacity is the tightest right now. So this is our capacity trend score thing we just released a few weeks ago for reefer. So the higher the number, it's the same logic here. The higher the number, the tighter the market is. In general, you can see the outbound market share is getting the height, the elevation on these markets. So still a lot of volume out of Atlanta, Harrisburg, and Indianapolis, big reefer sector up there, as well as out there out west, of course. And so you can see that the dark blues are really more concentrated out west. You've got Twin Falls, Pendleton, Oregon, and then, this is one of the Dakotas, but not a lot of volume here. So not necessarily.
Pretty flat area.
Pretty flat, not a lot of reefer volume, but it is a very tight market regardless. Ontario, Fresno, San Francisco, all showing very tight signals overall. So if we look at the numbers on the tree map here, you can see if you just look and you focus up there on the top left of the tree map, that's going to be the highest numbers. Obviously, the closer you get to 100, the tighter the market is. Fresno, California, up there with a 98. Ontario, California's got an 83, respectable number if you're going to be tight for sure. These are the markets you need to focus on if you're trying to end somewhere. These are going to be areas where you're going to see more spot market activity, more spot market volume, and obviously increased rate pressure.
Right. You always want to try to end up in California. You're always going to have something coming back the other way. I wanted to ask you, you said something about the Indianapolis market being a big reefer market. I just didn't know if you knew anything behind that. I just never heard that.
Yeah, there's a lot of contracted reefer freight there. Obviously, our tender data is highly focused on the contracted side of things. Think about Indianapolis. There's old industrial production. A lot of these warehouses converted into reefer, hubs and that type of thing for the Midwest. So let's go ahead and check out the, some of these more individualized markets next with our next chart here. So I pulled out the reefer tender rejection index for California. You can see that it's still extremely high at a 43.46%. So you saw the national rejection rate, we're down around 34%. California is not really budging. Rejection rates out in California still really strong. And then I've got Twin Falls here. It's kind of fallen down, but again, 70, 80% rejection rates. You might as well not even have a contract.
Right.
But that's recovered to a nice soft 47% rejection rate, 1 out of every 2 loads instead of 3 out of every 4. And then we've got Indianapolis here, like you talked about, 54% tender rejection rate in Indianapolis. And of course, the reefer markets, they kind of work together. That capacity is much more limited than van. So whatever happens in California definitely impacts the East Coast, probably a little bit more significantly.
Right, just simply because things are trading capacity back and forth now.
Yeah, and so let's look at the produce season rates here, the produce moves reported by the USDA, and you can see here the ag rates for Los Angeles, or San Francisco to Chicago, Los Angeles to Philadelphia, and Pendleton, Oregon to Chicago, all showing real strong strength right here, even through the holiday, throughout May and June, no signs of slowing for the produce moves.
Yeah, we should probably see some reefer rejections, or at least some reefer support upward over the next couple of weeks. I mean, it's right in the middle of a big ag season. We've got people outside drinking and eating outside a lot. Big holiday season coming up. So thank
Especially
you.
watch out for this this Pendleton to Chicago load, $7,000 coming out of the Northwest.
Crazy. All right, we'll hear more from Zach here shortly.